Hi, good afternoon, everyone. Hi, good afternoon, everyone. You all are welcome to the webinar of e-invoicing. We would like to introduce the basis business impact and implementation. I'm Hannah. I will be the hostess for this session. And this webinar is brought to you by AMA Global. And we will be discussing about why UAE invoicing matters now, the key concept on complaints rules, how finance and IT ERP system will affect, and what is the readiness gap assessment look like. And we are supporting the clients to get a clear and practical guidance how to onboard a e-invoicing team on your organization. Let me introduce our speakers. Today is CA Monish Mohan, founder and partner of AMA Global, and Mr. Ajay Krishna, Associate Director, Indirect Tax of AMA Global, and Mr. Hari Krishnan, co-founder of Compliance, and Mr. Karthik Reddy, Indirect Tax Experts of Compliance. So I would like to invite Mr. CA Monish Mohan, Managing Partner and CEO of AMA Global, to introduce e-invoicing and his global view. Over to Mr. Monish.
Thank you, Hannah. A very good afternoon to all of you. I'm really excited to see there are more than 400 participants, which is really a great support. And we thank you for the trust in AMA Global. So now, uh, actually, we all are in the new era of e-invoicing, into the digital era. So this is the latest topic which AMA would like to show some light on what is the e-invoicing, what are the deadlines on the same, and what are the penalties or penal investment, what is going to happen. So, as a part of global e-invoicing process, UAE have also have adapted a five-corner model in implementing the e-invoicing. It started in Italy 2 decades ago, the e-invoicing, and now globally implemented by more than 50 countries. And considering the GCC, KSA, Saudi Arabia was the first country to implement, followed by UAE. And Oman have already announced their deadlines to go at e-invoicing, which we are expecting the whole GCC countries will go into a digital e-invoicing model. So here we have partnered, AMA have partnered with compliance, becoming AMA compliance as our arm for the e-invoicing. So as a ASP, accredited service provider, we today will introduce our service lines. We show some light on how this five corner model is going to work. Literally, five corner model is the data flow of how the seller and buyer get connected with this system. So there are three pillars of e-invoicing. Let's consider on that. The first one is structured electronic invoice. From the traditional paper invoices, it's going to move as electronic invoices, which is transmitted with an approved exchange channel. So an accredited ASP will be there to transmit, or they will represent each buyer and seller for transmitting the electronic invoices also to FTA. So every company must adopt a ASP. So ASP is called as accredited service provider, who is approved by the Federal Tax Authority and the guidelines of PEPOL. So as AMA compliance, we are listed with PEPOL, and along with the authorities of UAE, we can support you with the e-invoicing services. Our integrated softwares are get integrated with all of your ERPs. It is an open-ended, and when the UAE goes with a phase-wise implementation, as you are, how many of you are aware that companies with 50 million turnover plus have to mandatorily appoint an ASP by 1st July 2026, and the rest of the companies, that is the smaller companies below 50 million, and the government companies have to mandatorily adapt by 31st March 2027 their ASP. So this phase-wise implementation will be detailedly discussed over the presentation, what all things to be done as well. Yeah. So now let's see the global shift towards the digital tax reporting. The tax is becoming digital, just like in any other compliance service. The tax hereby we go with a self-assessment, and in the VAT we were submitting a cumulative quarter-wise or month-wise summary of transactions. From there, the tax reporting goes to digital. It will go with a line-by-line reporting. It gives a real-time tax visibility. Whenever a purchase is happen, it gets real-time intimated to the tax authority and get it verified with the transaction. So you have to be well aware that all of your transaction at the time of raising an invoice, it get on a real-time basis, get informed to the tax authority. So reversing an invoice like previously, at least for some transaction we have done it, delay in invoicing, all will attract penalties. Also, we had a habit of at the time of finalizing the year-end accounts, a lot of entries have been posted, which have to be changed because now there is a real-time implementation system. And this is a part of worldwide movement because, as I earlier stated, more than 50 countries have adopted, and the GCC is completely moving towards e-invoicing, which can be called as a digital tax era reporting. Maybe I presume will be followed by maybe automated VAT returns, maybe the corporate tax returns also, because when you are reporting on a line by line, the automated tax return is very near to happen. Yeah. So when it comes to e-invoicing, I always say don't wait for the deadline because always the fate favors the prepared. When you have to do, and as you see in the corporate tax, the dates were announced 2 years before, and there was no single day of extinction. This shows RUI's commitment towards any implementation. So UAE have gone with the most updated model of e-invoicing, and they have already given you the deadlines, what date you are supposed to be ready with it. So the phase starts with a pilot phase, which is a voluntary implementation phase. I suggest each and every one of you to get the timelines, get notified by the timelines, and appoint your ASP. Let them start with the implementation process also, because your ERP have to be implemented, and it's not only pre-implementation, it's how the post-implementation stage also, because at the time of synchronization time or integration time only you will come to know that your TRNs are not yet updated, your vendor or the supplier TRNs have gone with some name changes, or because you may collected it 2018, thereafter nobody have followed on the same. So all this have to be get integrated, and the practical issues sometimes if we have multiple licenses, we use one particular license get registered with our utility bills, which may not be the company who use that utility. So in such situation, it should go with company to company. And as corporate tax, every returns have to be pre-populated with the actual expenditures of that company. So the invoices coming on different names will attract penalties. So to have a smoother transition, it's always better to appoint your ASP at the earliest possible, because once an ASP is appointed, they will do the gap analysis process. The gap analysis process is that we identified how it can be integrated with the ERP, how well your team is prepared for adopting the invoicing, then the total methodology of adoption, like the invoice process, like your accounting, transaction, booking process, reconciliation process. So today in the overall section, my team will show how a e-invoicing software dashboard will look like, what are the integration methods to be there, and they will show some light on the law of e-invoicing. So today I would like to thank you once again and welcome you all of you all the attendees to our detailed section on UAE E-Invoicing. I would like to introduce Mr. Ajay, who is a tax agent also, to give a detailed introduction on UAE invoicing. Thank you, and over to you, Ajay.
Thank you, Mr. Morish, for the introduction, and I'm thanking you all for attending this session with awareness, with getting the awareness of this basics of the UAE invoicing and how it's going to be hit, like how it's going to be impact your businesses in an finance way or in like an IT way, how it's going to be hit. Then from the scratch, we will start. Like we don't have to be an expert of e-invoicing because it's just the implementation stage, but we will run through the basics first. As of now, in each and every like organization, invoicing happens manually. Even if we are using some ERPs, the invoices are created through the ERPs or through paper-based invoicing is also happening in retail. Then it will be sent or stored in a PDF format or sent to the customer. Then, as of now, the filing is happening manually at the month end or the quarter end. At the time of VAT reporting, the consolidated amount is being reported to the FTA. That's the only reporting that's happening for the transaction-wise reporting here in the UAE. There is no real-time process is happening, but upon introduction of this e-invoicing, these things, these practices will change because once our ERP is generating any invoice or tax credit note in our system, it will be automatically generated through an XML format, which is real time. Real time is submitted to the FTA, and there should be some authentication for this invoice. Each and every documents that created through the system, then it should be having a global PEPAL network access, which is PEPAL is a like a global network who is foreseeing this UA like e-invoicing uh, progress all over the world, and all this system change will be happening even if there should be some PDF and paper invoice will still exist, but parallelly these also has to be adapted by each and every organization here in the UAE, because by 2027 all the businesses, all the private businesses and the government businesses should adapt this e-invoicing. We will come to this deadlines and this mandatory adoption time schemes like we will discuss later. Then with the e-invoicing, the government is getting a clear visibility of the transaction which is happening in the region. Then we will move forward like what are the important components and how it's why e-invoicing is like having so much importance here in the UAE. One is like it's like a automated processing because the manual intervention of uh, reporting and generation and validation is not there. It's an automated process. Each and every invoices will be automatically processed throughout the generation, transferring or transmission, and the validation will be happening automatically, and it will be indirectly accelerate the cash flow because the time taken to deliver the invoice from the supplier to the customer will drastically reduce because after the introduction of e-invoicing, because it will be delivered within milliseconds. Then it should be having this reduced compliance risk because at the transaction level and at a entity level, all the transaction will be having a risk check upon their generation itself. Then there should be a reduced compliance risk, and then as far as this government and the federal tax authority or ministry of finance is concerned, there should be a real-time economic insight will be there because they can foresee how how each sector in the economy is performing, or they can have a trend analysis how this last compared to last decade how this economy is performing in real estate or construction. All this comparison and this economic insight they will be having with the introduction of e-invoicing before they are getting the data real time from each and every businesses here in the UAE. And then for businesses part, all the companies or the enterprises who is taking part in this e-invoicing will be having a real-time tax visibility, because they can with the dashboard of the ASP, they can access how much output tax they have collected and how much input tax they received, they paid to the supplier, and they receive the tax invoice through the invoicing system. Then there should be a real-time tax visibility. As of now, upon preparing any tax returns and month end or quarterly tax return, then only they will be having a visibility over their tax position for the indirect tax. But going forward, they can determine for which period they have to look into what all are their tax positions. It will be possible. Then combating tax fraud, it's like a internationally this tax gap problem will be there for this indirect tax, because the tax gap refers to the gap between the anticipated tax collection and the actual tax collection for each and every economy. Then as far as European Union and every other developed countries are concerned, they are combating with this tax fraud and this tax gaps. With the introduction of e-invoicing, they can drastically reduce this tax frauds and tax gaps, because all the transaction will be real timely. They will be validating whether it is eligible for the input tax or how much output tax can that they can expect. Then on a macro level, this combating a tax fraud will be a betterment for the entire economy, like globally. And we will move forward with the five corner model. For that, I will welcome Mr. Karthik, my colleague, for this running through this system, how it.
Yep. Thank you, Ajay Krishnan. So we'll be going through the five-corner model of UAE. First, we'll understand what is this five-corner model. MOF or FTA is following PINT AE standard and a five-corner model in UAE. So the name itself says the whole model will have five parties into the play. So the parties are like seller is the first corner, seller's accredited service provider or seller's e-invoicing software is the corner two. Similarly, buyer is the corner 4 and buyer's ASP is the corner 3. And the reporting or submission authority, FTA, is the corner 5. So we have a video. With the help of video, we'll try to explain the flow in detail. So since the supplier is the initial part, supplier will have the invoice data and submit it to supplier's ASP, who is the corner 2. And from corner 2, data moves to two parties. One is corner 3, which is buyer's ASP, and also it will go to FTA for submission, not the entire data, but the TDD, tax data document, to FTA. And in return, corner 2 will get a response in the form of MLS from FTA. And also corner 3, the buyer's ASP will also return an MLS to corner 2, which is like buyer's ASP to seller's ASP. And also corner 3 has the responsibility to submit the invoice data to corner 4, which is buyer's ERP, and also the TDD to FTA, which is corner 5. So this is how a five corner model in UAE will work like. And the five corner model in UAE work in a DCTCE model, decentralized control, transactional control and exchange. So here the service providers actually has the authority or power to validate the invoice before submitting it to tax date, before submitting it to FTA. So this is what DCTCE refers to. And coming to the timelines and phases, UAE has approximately 4 phases. One is like pilot program and voluntary adoption. Like this will start from July 1, 2026. Selected heavy businesses or big size taxpayer working group businesses are liable to submit and transmit invoices to FTA from July 1, 2026. And any business who wants to voluntarily submit invoices, and I mean any VAT registered business who wants to voluntarily submit invoices to FTA can choose to submit from July 1, 2026. And moving on to the phases, the phase 1 starts from Jan 1, 2027. for the businesses whose revenue is more than 50 million in the previous financial year, and they should appoint an ASP by July 31, 2026. So phase 2 will be applicable for those businesses whose revenue is less than 50 million, and invoicing will be mandatory for them from July 1, 2027, whereas the mandatory date for them to appoint ASPs is March 31, 2027. And the final phase, whoever are exempted from the first two phases and pilot programs, the small businesses along with all the government entities, it will become mandatory for them from October 1, 2027, where like they have to appoint ASPs from March 31, 2027. So FTA also has shared or circulated few penalties for non-compliance. There are like 6 categories in them. We'll go through one by one. So if the issuer or taxpayer fail to implement e-invoicing system or appoint ASP, the penalty will be 5,000 dirhams per month. And if the issuer fails to transmit or issue an invoice or a credit note, then the penalty will be 100 dirhams per invoice, capped at a maximum of 5,000 dirhams per calendar month. And if the issuer or a recipient of the invoice fails to notify the FTA about the system failure or downtime, then both the parties are liable. I mean, whoever makes the failure are liable to pay AED 1,000 dirhams per day or delay per part of thereof. And if any issuer or recipient fails to notify the ASP of the changes in the registered data or the onboarded data, the penalty will be AED 1,000 per day of delay or part thereof. So this is all about penalties and the timelines circulated or issued by FTA. From here on, like I'll hand over this to my colleague, like Ajay Krishnan PS.
Yes, thank you, Karthik, for summarizing what are the timelines and the penalties that in case any delays in the process. Then we will look into what are the impact areas with regard to finance is concerned. Because finance is like in invoicing aspect, this financing is consist of accounts receivable and accounts payable. Then as far as invoicing is concerned, both accounts receivable and accounts payable will be having a transformation, because each and every business is having invoices which is generated by them and generating to them. Then first we will look into what all are the transformation that accounts receivable department or the internal department of each company will be having. Then first thing, like each and every accounts receivable invoice that's generated through the invoicing system will be having a digital format validation, because in all over the UAE there is a pinned AE format which is prescribed by the PEPOL and which is approved by the FTA to generate each and every business transaction, that's tax invoice or tax credit. Then in this once this digital format validation has been done, the changes to any of the invoices will not be possible. As of now, like some businesses may or some customers may require to change or edit the invoice date, invoice value, or some other details in the invoice. But once a invoice is generated through this invoicing system, it cannot be edited, because it's not only your document, it's shared with all the stakeholders, which is the ASP of the acting behalf of the supplier, the Federal Tax Authority, and ASP acting behalf of the customer and the customer. All of them will be having a digital data of that invoice. Then it's not possible to change that invoice. Instead, they have to revise that invoice with a tax credit note, which is also issued through the e-invoicing system itself. Then this digital formatting, like format validation, is very important to keep in mind, that once the data is transmitted to the system, it cannot be retrieved or modified. Then there should be a digital transfer of documents, because once is digitally created, it's not only shared through like a PDF or through email or like a physical invoice, but it's transferred digitally to FTA also and to all other parties involved here in this invoicing ecosystem. Then there are some penalty risks for not following these timelines, as Mr. Karthik already mentioned. This also will be a concern with regard to AR department is concerned, because this all the document generation, whether it is tax invoice or whether it is uh, tax credit note, it's generated by the accounts receivable department, and they have to take care of, like, they have to uh, make sure that they are not into the risk of penalties, which is prescribed by the FDA before the deadlines. That's also prescribed by the FDA. Then we will look into how this accounts payable transformation will be happening, because as of now there are some checks are happening in accounts payable, because if it's a business is inventory oriented with the raw materials and this process oriented businesses, they'll be having purchase orders and goods receipt notes, which is GRNs. Then there should be some like physical checks, and this reconciliation and the validation will be happening manually. But now onwards, while this invoicing is being introduced, this has to be digitally like validated, because once we are receiving an invoice from the supplier, we have to validate with the PO or the GRN or the proforma invoice if it exists before accepting that invoice, because we have to make sure all the data that's received through the ASP as an AP invoice, that's accounts payable invoice, to the like ERP through the ASP should be correct. Otherwise, we have to communicate to the supplier and make the necessary changes. Then that validation and this pre-checks should kept in mind for each and every accounts payable department. Then they have to like how we will handle this rejected invoice in case like delays in VAT recovery, how it will be happening, because as of now this VAT recovery is happening based on the date of invoice received, but like going forward it will be happening like each and, because invoice will be transferred instantly within milliseconds, but the physical invoices will be delayed. Then how we will handle, how the department will handle, and how they reconcile it with the figures of the VAT return, that has to taken care of. Otherwise, it will be going to be a big impact on the business, especially in the accounts payable department. And then moving forward, like we will be looking at what are the data accuracy requirements. First one is like, as you all know, all the data is in our ERP, and from the ERP, it's uh, transmitting to the ASP. Then upon transmitting, there are some data validations has to be happen, and it has to ensure that all the data is transmitting to this ASP is 100% validated and correct. First one is tax registration numbers. They have to be validated. As you all know, as Mr. Monish already mentioned in the introduction, some might have the TRN numbers of the supplier or the customer, which we collected in during the introduction of the VAT. It's in 2018, but due to some reasons, maybe they changed their entity type or they joined a tax group, and at that time their tax registration number will be changed. Then before implementation of e-invoicing, these all the tax registration numbers of each and every supplier and customer has to be validated. Otherwise, it will be correct. And going forward, like invoice amount precision, because each and every invoice should be like treated with the correct VAT treatment and the correct tax codes before pushing the data into the e-invoicing accredited service provider. Because as you all know, there are several types of transactions are here in the UAE event. There will be standard rated like supplies, XM supplies, like sales based on profit margin scheme, zero rated supplies, supply subject to reverse charge mechanism. There are n number of transactions, and the combinations of the same is happening in each and every like businesses. according to the industry. Then this invoice amount precision is very important, and this tax treatment of the same is also very important. And then with a thorough like understanding of the business models and the gap analysis only, we can identify what all are the transactions involved in each and every business and how to handle each and every cases separately, because we cannot use the same data dictionary for each and every transaction. We have to make it accordingly. Then next one is master data mapping. Master data mapping refers to the data mapping that's happening like inside the ERP with the integration with the ASP, which has to be mapped correctly to be like able to generate this invoicing with the prescribed form. Then this e-invoicing is already having an enhanced control mechanism. That's like a real-time validation, which is having automatic like validation checks, which is having that invoice submission and FDA validation. Like each and every business should understand how to submit the invoice. Invoicing process will change in AP account payable is concerned, because each and every invoice will be submitted to the customer digitally, as well as the PDF format, as we are currently practicing. Then there should be some validation which is happening real time, which we already mentioned in the previous slides. And then we have to, like, each and every business should plan how to handle rejections in case any data rejection is happening from ASP side and from FTS side without affecting the normal business flow. Then we will look into like what are the documentation and approval transformation, because as like UAE corporate tax is being introduced here in the UAE, there are some legal status changes. Like there are lot of companies, they change their legal status from sole establishment to LLC and vice versa for plan for restructuring their businesses to be adaptive to the corporate tax environment. Then we have to make sure that how this changes, these type of changes will affect in e-invoicing accordingly. Then digital transformation, which is like every invoice, as we have already mentioned, every invoice and the tax credit note will be digitally transmitted, and how to retrieve this data and how to store this data and how to approve each and every invoices, because as of now the head of finance will be approving each and every invoices, but going forward, the flow of this approval, internal processes in each and every businesses will be having its own changes. And then we have to, it's like a mandatory thing. There's a mandatory retention of 5 years for tax auditing purposes for all the e-invoicing data. Then these are the documentation and pre-approval, like approval transformation on a higher level. While we are going in detail upon gap analysis, we will see what all are the transformative things that we have to adapt into every business. Then to introduce IT and ERP impact areas, I will introduce Mr. Karthik to continue it from
here. Yep. Thank you, Ajay. Yep. So moving on to the IT and ERP impact or IT or ERP matter in UAE invoicing. In the UAE's new invoicing landscape, customer ERP is no longer just a record keeping tool. It is a single source of truth for tax compliance. Since all invoice, customer, and VAT data originates from the ERP configuration, it is the most crucial factor for compliant e-invoicing generation. Tax logics for complex scenarios like standard invoices, credit notes, and its adjustments must be applied at the system level. So IT teams become the essential partners in integrating these systems with accredited service providers via APIs. Beyond just transmission, Your IT infrastructure ensures the real-time validation and stable connectivity required by the FTA. Ultimately, the system-driven approach is what builds digital auditability, logging every status and timestamp for future regulatory reviews. Yep. Coming to ERP to ASP integration part, compliance integration, our integration platform acts as a universal bridge, connecting diverse accounting, ERP, POS, and CRM systems from Sage and Oracle to SAP and Cloudbits directly to the global tax authorities. Using an auto mapper, compliance transforms your native invoice formats into required formats such as PEPAL Pint, PEPAL BIS 3.0, or UN CEF Fact XML, and Pint AE specific to UAE. This slide also demonstrates our capability to handle multinational requirements, including specific frameworks for UAE, KSA, Malaysia, Singapore, or any other country that we are dealing right now. By standardizing global e-invoicing through a GETS single API, which is a unified API or a special standard that compliance has developed, we eliminate the complexity of managing different technical formats. GETS is a scalable solution designed to ensure your business remains compliant regardless of which system you use to generate invoices. Yep. Coming to compliance integration platform, compliance platform offers three flexible pathways to connectivity: direct API integration, middleware solutions, and real-time submission. Modern ERPs can connect seamlessly via APIs, while our middleware converts legacy data into Pint AE XML or JSON for smooth communication with tax authorities like FTA. As shown in the dashboard, users can gain a combined view of B2B, B2C, B2G, or any statistics, providing a real-time success rates for cleared, rejected, and submitted invoices. This visual interface allows finance teams to monitor different countries' compliance alongside UAE at one place. It effectively removes manual intervention, ensuring immediate validation and reporting to FTA. Comprehensive data flow mapping. This slides maps the journey of an invoice from initial invoice creation in your ERP to final submission to Federal Tax Authority. Our platform ensures that every required data point is captured during creation before being automatically converted into pinned AE XML standard. We perform a real-time validation check against the specific FTA business rules to intercept errors even before they lead to rejections. Once validated, invoice is transmitted immediately, providing complete traceability and auditability for every transaction. Furthermore, the platform supports complex configurations, including multi-currency, multi-entity setups, and also multi-country support, giving you total visibility into your global invoice statuses. Also ensures your data remains consistent and audit ready at every single step. Yep. From here on, I'll hand over this to my colleague.
Yes, thank you, Karthik. Yeah. Uh, so far, you would have, understood what is the impact on finance area and the IT side, especially on the ERP part, right? So it is very crucial for every business that is getting impacted by the new e-invoicing regulation to conduct a detailed gap assessment. I would say a detailed impact assessment. So we, at AMA Compliance, we have a five-pillar framework where we, touch different categories for conducting this gap assessment. One main area is finance, and within finance, as we discussed, data readiness is a major area where we have to actually, understand where our current data structure is as of today, especially on the supplier master, the customer master, and the the tax codes that we have. All these will have to be understood before we start approaching, before we start implementing an e-invoicing solution. So we have a five-pillar framework that addresses the data readiness part, the technology and integration part, especially how far the ERP system or a combination of multiple ERP systems are ready in terms of integration capabilities, in terms of communicating with the PayPal network. All this will be addressed in the second phase. And third, we have the AR and AP processes. So with the new invoicing regulation coming in, I hope you would have understood the impact on the AR side and the AP side. So completely from a manual process, it is going to get automated. and also digitalized, the complete end-to-end AR and AP process is going to get impacted. So we have to do a detailed study on what is getting impacted, what is the process that we are currently following, what should be the new one that will align with the new regulation, right? And fourth, we have people and change management. So when the process changes, obviously the people who are on top of those processes is going to get impacted. So when we do the impact assessment, we understand the current process, current people who are on top of the process, and we propose the change management, detailed change management proposition where what kind of training needs to be conducted for the tax team, for the IT team, and jointly for the finance team as well. And last comes the governance and risk. So with the invoicing coming in, we have new parameters to track and monitor. At the end of the month, at end of every quarter. So we will also be advising on that part. So on a broader scale, we categorize this whole invoicing project into 3 different phases, as you see here: pre-implementation, implementation, and post-go live. So at AMA Compliance, we provide comprehensive support across all these 3 areas, right from pre-implementation, where I address the impact assessment. That would be the first and very first most preliminary step to address on. Then we get into the implementation, where we can manage the whole invoicing project. We conduct the first action item would be to address all the gaps that were understood based on the impact assessment, fix them, and then approach and then start working on a industry specific solution design, which is more close, which aligns more closer to the business processes that you're already following. And then we, proceed with the data mapping, where we have something very unique. And post the data mapping and the implementation and the integration setup is done, we conduct a detailed UAT testing, and we proceed with the UAT sign off, and then we go live, right? So throughout this process, from a advisory point of view and from a technological implementation point of view, we will be helping you with that. And post go live, which is very crucial, most of the businesses undermine the post go live phase, where post go live there will be several changes, as we proceed, where the FTA system might be updated, the PayPal formats might be, upgraded. So all these changes, along with the business changes, are very crucial to be tracked and monitored. So we do help and advise you on that phase. Once we are live with the invoicing system, we will be providing a hypercare support for a first 1 to 2 weeks, depending on your business impact. And then post that, we will be providing comprehensive support to help you with the business changes as well as the regulatory changes. And there are other benefits of opting compliance as the invoicing solution. So we have one global platform that helps you become compliant in multiple jurisdictions, as well as which helps you and your IT team which has multiple ERP systems or accounting software or custom ERP solutions that you have developed in-house or custom sales solutions that you're using to go live in a very quick manner. So how we do that? We have a AI assisted mapping system that helps cut down the go live implementation time by a larger time. And then we have, as I said, the AI mapping that we do, we are reducing errors by a large count. So we have automated validations at each layer. We do validations at your ERP layer, at the system layer. We fix the data. Though there is gap assessment done, the master data is validated. We do a double check on how the data residing in the ERP system is in a synchronous manner. Each and every time there is a data created, it is updated. And second level of validation, before any document is posted to FTA, we actually pre-validate that invoice, not just on a format level, on multiple aspects. So this ensures that any document that goes out of the compliance system from the customer side is 100% compliant in order to meet the regulatory requirements set out by FTA. So now I would like to hand it over to Ajay for to explain our services and next steps. Over to you, Mr. Ajay.
Thank you, Hari, for the detailed explanation. Then we will look into how AMA complaints can introduce ourselves as problem solvers rather than finding errors in your software. Then we are putting forward a gap analysis, which is explained by Hari, how the importance of the gap analysis and how we can check your system, not only your ERP system but also your current process flows within your enterprises. How this AR and AP processes is carrying as of now, and then it's having like 4 elements. First is process review. We'll review the process, how this process of both AR and AP and this system processes also we will review. Then data quality checks, like as we already mentioned, like master data and invoice field, VAT treatment, VAT transaction types that are involved in each and every industry and businesses. Then a risk assessment, as you already mentioned, we will assess how much gap is there, and then we will compare how much risk you carry if you are implementing invoicing now before crossing this risk. Then we will be having a readiness report, which is nothing but like an action plan to reduce those risks before going live and making this integration happen before going live. Then the next one is like implementation and long-term advisory. As you are mentioning, like this implementation will be the key point that the FTA is looking at, where they are mentioning the readiness of the e-invoicing within a prescribed time period. Then we are capable for this implementation and integration and go live support. Going forward, this tax technology will be having an added advantage to you and your enterprise, because going forward, as Mr. Monish already mentioned, there are chances of getting this automated VAT returns and corporate tax returns and other reportings, maybe emirate-wise reporting or some it's not at declared yet, but in future we can expect all those things of compliance reporting. Then we are having a dedicated tax technology advisory service in our line of services that we are currently providing. And then moving forward, we can have more talks on this tax technology in this region. Yeah, that we already discussed, like this one, tax automation strategy, how this e-invoicing data or this invoice data or integrating with your ERP can help to automation of your processes, which is happening globally, which is drastically improve the productivity of each and every department of every enterprises. Then cross-border digital compliance, as Mr. Hari already mentioned, this AMA compliance system is capable of handling this cross-border tax transactions. While this global e-invoicing is in this in the region, we can help on that one. Sorry. Then tax governance models also, because it's happening different jurisdictions is having different tax laws, but with a overview of the same, we can have a added advantage. Then technology evaluation and optimization, which is having a hands-on advantage with how to perform better and how to plan better in a tax perspective with the current data and with a global solution. Then we are handing over to Ms. Hannah for the Q&A. Before the Q&A, she'll be having a small poll for all the attendees.
Okay, thank you, Ajay. So our questions, you can just join for the poll. And also the first question is, following the implementation of e-invoicing, will business still be required to file VAT returns manually, or will the process be automated?
Yeah, I will answer this question. As far as now, this FTA is mandated. There is no news for like automated VAT returns because only B2B transactions are here in this pipeline. Once the B2C transaction is also there, which we can expect in the near future to be reported to the FTA through this five corner model or any other model prescribed by the FTA, we can expect a tax automation in this field. And then, but before the tax automation, we will advise we have to prepare in-house tax automation softwares or like readiness before uh, FTA is mandated.
Okay, the second question is, what typically takes the time most during the UAE e-invoicing preparation?
Yeah, I'll take this question. So mostly there are 3 to 4 things that would typically takes or consume most of the times while preparing for UAE invoicing. First thing is master data enrichment. So whenever we first go to ERP, we'll have random buyer, seller, and item details or TRN details, everything. So when it comes to invoicing, obviously this should be properly aligned and stored for processing the invoicing properly. And also the gap analysis and customization. Like most ERPs do not natively generate print AE XML. So first we have to map internal database fields to mandatory data dictionary issued by FTA. And next thing is business logic alignments. So first we have to map complex scenarios like special transaction cases like reverse charge, zero rated supplies, exports, agent billings, etc. To and also identify specific technical gaps required by FTA and map them properly. The logic must be built into the system to ensure it triggers correctly at the moment of invoice creation and integration with ASP systems. So mostly this is and also the point which doesn't align with systems preparation is like appointing a right ASP. I mean, choosing a right ASP will also take a bit time, or going with the wrong ASP sometimes even make you do entire redo the entire work, which will obviously be a time consuming thing. Probably I
Okay.
answered the question.
Okay, thank you, Karthi. And the second question, the third question is, what is the mandatory procedures for canceling or reversing an invoice that already been successfully issued and reported to the e-invoicing system?
Yeah, I will take up this question. Like once an invoice or any other document, whether it is an invoice, tax invoice, whether it is like a tax credit note, once it is transmitted to the system, it is not possible to edit or modify the same. We have to have like a credit note in order to cancel that one or reduce the value which is prescribed by the FTA to reduce the value of the transaction through a credit note only. It's not possible to edit any transactions once it's posted into this invoicing system. I hope I answered the question.
Okay, so the next question is, what are the most common ERP or data issues that cause e-invoice rejections?
Well, I'll take this question. So mostly, as it said, like a few points that comes from my previous answer, like master data alignment or incorrect sellers, buyers, or line item data. And next point would be TRN errors, like tax registration numbers or VAT registration numbers. Giving an invalid or dummy TRNs in the invoices will also trigger rejections. And next thing would be formatting. Like let's say fields which has to be filled with numbers needs to be filled with numbers, and fields which needs data formatting will need date only. Like if user pass some theoretical or string type of data in the date fields or numerical fields, obviously the invoice will get rejected. And next thing would be the tax calculations, like tax calculations or any other calculations at line item level or even at invoice total levels. So and also rounding of differences will also cause invoice rejections. And missing up, I mean, everyone will have an idea on optional and mandatory fields, but mostly people or users or taxpayers will miss the conditional fields, let's say like exchange rate fields or accounting code fields. These fields will become conditionally mandatory depending on some other depending on the data in some other fields. If we miss them, obviously invoice will get rejected. And next thing is schematron or XML relevant issues, like not able to properly form or develop a proper XML that aligns with pint AE structure will also trigger an rejection. Probably I try to cover as much as I remember.
Okay.
Hope I have answered the question.
Okay, Mr. Karthik. And the next question, will the existing practice of making year-end transfer pricing adjustments by issuing additional invoice documents remain permissible once the e-invoicing system is implemented?
Yeah, I will take up this question. The last year was the first year for this corporate tax return filing, and during the corporate tax return filing, there are lot of invoices has been raised intercompany for this related party transfer pricing adjustment at the year end or at the before submitting this corporate tax return. But going forward, or once this invoicing is implemented, backdated invoicing will not be possible, because it has to be real time validated and it has to be real time reported to the FTA. Then all the transfer pricing adjustments, once we have all the benchmarked uh, rates, that benchmarking report, we are having it handy, then it's always better to have all the transaction without any pending for this year end or before submission of corporate tax return. It has to be uh, like how to how lively, real time. We have to post those entries without waiting for any deadline for corporate tax. I think I answered this.
Okay, thank you. Then next question, how is sensitive invoices and tax data protected when exchanged electronically under the UAE invoicing framework?
Mm, Maybe I can take this up. No? So, from a data security standpoint, we have certain security frameworks mandated by FTA as the ASP that the ASP platform should be following. One such is ISO 27001, which is information security management thing. So, as the platform is ISO 27001 certified. And from a PEPAL standpoint, the whole PEPAL network, the data transmits on a AS4 protocol. Again, that is a secure protocol. And apart from this, at the platform layer, we have certain types of hashing on documents, invoices, credit notes, and the other documents. So which again, provides some sort of security or authenticity on each of these invoices. And apart from this, we do have multi-factor authentication, which is by default enabled on the system. So every user will have to log in through the MFA. And apart from this, as a ASP, the MOF FTA also, from a security standpoint, checks the system, how far the system is placed. So this will ensure that all the documents transmitted through this invoicing framework is, in a secure manner.
Okay.
I
Okay.
hope I answered that question.
Okay. The next question is, do you think the current timeline is realistic for SMEs? Would you recommend that the government introduce a grace period during while the penalties are waived, which companies learn the system?
I will take
Yeah,
up.
I will take up this question.
Yeah, yes,
Because
please.
as you know that you see the history of UAE, most of the time the deadlines are not getting extended. And if you see the registration of corporate tax, there was a deadline and there was a grace period if you do the filings on time before a particular period, they have reversed or they have cancelled the penalty. So I personally suggest don't wait for any grace periods because the deadlines will remain the same. In spite of getting a penalty and trying to get a waiver, why can't we try to do it before the penalties or before the deadlines? Because we have a sufficient time right now for every organization, even for the large corporate, small corporate, to get it within the timeline. So my advice is always don't wait for the deadlines because deadlines are not getting extended, and it completely depends upon FTA policy that if there is a penalty being imposed and thereafter any waiver on the same can happen. Thank you.
Okay, thank you, Monish. And the next question is, what details are getting transmitted? Does it transmitted only totals?
Yeah, okay. Let me take this question. Okay. So there are, I mean, transmission is actually in two, I mean, points here. Like one is seller's ASP has to submit invoice, I mean, send invoice data to buyer. So entire invoice has to be sent over from seller to buyer. Whereas coming to FTA, it's the tax data document. I mean, even though it doesn't have all the fields, but it will cover most of the typical line item data, buyer seller TRN data, and also total summaries. I mean, total document summaries.
Okay,
Uh,
thank you. Thank you, Mr. Karthi. And some countries such as Singapore, Japan offered subsidies for tax credits to help SMEs implement e-invoicing software. So do you think financial support from the government is necessary for UAE SMEs?
Yeah, I'll take this question up. So yeah, as rightly mentioned, Singapore had some, in the very initial stages, there were some sort of incentives provided to the businesses who were, early to adopt e-invoicing. As of now, today we don't have any incentives or, any sort of benefit, monetary benefit or provided or announced by FTA or MOF. So if there is such announcement, I think that would be, it would be helpful for the SMEs. But as of now, it is not there to clarify, right? So whether it would be beneficial or not, we cannot say at the moment because the invoicing system is yet to be rolled out, right? For even for the large corporates, right?
Okay, thank you, Hari. And next question is, how does an import transaction works in the five corner model?
Yeah, I will take this up. It's a very relevant question because UAE is a hub for this importing and exporting, and all. Then most of the businesses will be having their import transactions. Then for import transactions, as you all know, the supplier will not be here in the country to report through this UAE e-invoicing system. Then, as a receiver, we have to report as we are reporting our RCM. We have to report through this e-invoicing ecosystem through the FTA that we bought these goods from this specific supplier. That's how the system is designed. I hope I answered that.
Okay,
So
thank you.
just to add,
Yeah.
yeah.
Please.
Yes, Hannah. Just to add one more point to the previous question on the subsidies or tax credits offered by MOF or FTA, I just wanted to add one more point. As the ASP, we are we will be providing 100 e-invoices per year as a complimentary service. This is again is a direction from FTA or MOF to every ASP will provide 100 e-invoices for free per annum. Right. So that is the kind of incentive announced as of now,
Oh, congrats.
which is not a direct subsidy or this thing, which is indirect thing, which is again a benefit for the SMEs, right?
Thank you, Hari. And the next question is there is any conversation tool available now for PDF or Excel format invoice to XML format?
Yes, we do have. As now Karthik was touching the GETS framework, we have multiple formats supported from multiple channels. So when I mean channels, it could be multiple systems, ERP, POS system, sales system, or email. So we support multiple channels and multiple formats. So any format of invoice can be converted into the Pint AE XML format, which is a technical integration piece we have productized.
Thank you, Hari. And one more question. We are using more than 4 softwares. Is all them required to integrate to ASP?
Yes. So if there are transactions that attract the, that come under the legal requirements, the legislative requirements of e-invoicing, then all of those systems will have to be integrated. So integration approach could be different for each of these systems. That is where we conduct a detailed impact assessment to study and propose a solution that is more convenient for your, as per your business needs, right? So we cannot give a precise answer. We have to look at those 4 systems and then propose a solution.
Okay, I think the questions are over. And I would like to thank each and everyone joined with this webinar, and especially to the speakers. Once again, I would like to thank Mr. CA Monish Mohan, the founder and partner of AMA Global, Ajay Krishna, Associate Director, Indirect Tax, AMA Global, and Mr. Haris, and founder and CEO of Compliance, and Mr. Karthik Reddy, Indirect Tax expert of Compliance. So once again, thank you so much for this exclusive session. We will be conducting more sessions again. So thanks for joining with us, every participants. Thank you so much for your wonderful questions.
Thank you all. Thank you for joining the webinar. Thank you.
Thank you all.
Thanks,
We'll be,
everyone.
Thank you.
It
Thank
will
you,
test
everyone.
for the unanswered questions, and we'll answer it personally, one by one.
Yeah.
Thank you.
Thank you, everyone.
Thank you.